Hello, everyone. Thanks for joining and welcome back to Wall Street Silver. Joining us today is a good friend, Andrew Axelrod. He is a global macro commentator and he is featured on Zero Hedge and Bitcoin Magazine. Welcome back, Andrew.
Hey, Ivan, thanks for having me. It's great to be back. I think I mentioned this the last time, but honestly, you far and away, you have one of the best Twitter accounts out
Oh,
there. So
thanks.
for anyone watching, if you're not following, you definitely should. There's a ton of good content on there.
I
I
appreciate
I
that.
read you I read you every day. Yeah.
Yeah, no, I appreciate that a lot, Andrew. And, I wanted to bring you on because we wanted to talk about everything that's going on with gold, silver, BRICS nation, and even de-dollarization. And the massive question I have for you is, and a lot of people are asking this, is about the BRICS nations. I read an article yesterday saying BRICS nations have been buying massive amounts of gold. What are they preparing for, or what are they pushing for, Andrew?
Yeah, I think we're at an inflection point. It's a super interesting time. So just to give a bit of background on this, so back in 2010, obviously you have the US dollar system and the dollars made up 70% of global foreign exchange reserves. This is according to the IMF. And within the last 13 years or so, that's dropped down to 59%, which is significant just given the total size of this market. So what you're seeing is a fracturing. That being said, about 90% of global trade where the dollar is on one side of the currency pair, that still seems to be intact. But obviously, if like we're seeing with the BRICS nations, if countries are starting to pull away from that standard and they're starting to settle in their local currencies, like we're seeing, maybe we saw the same headline, but I was reading this article about India and Russia getting into negotiations over whether rupees would be acceptable or not. I think Russia was pretty keen to deal in yuan, but the salient point here is not it's not it looks like it's not going to be dollars, or at least there's a pullback from dollars as a reserve currency. So one piece of that is going to be a diverse number of global currencies, and another part of this could be hard commodities like gold, silver, Bitcoin. And so, yeah, we're definitely seeing a lot of that abroad. We're also seeing that in the US. So I don't know if you saw RFK Jr.'s speech yesterday, but he's the first major US candidate for president. I think he's polling better than Biden.
Right.
So he's definitely a major candidate, and he's come out pretty strongly in favor of a commodity-backed dollar, which is, insane. If you'd said in the last election that this would be like a big part of this could be a big part of the debate, people would have laughed. But it's the same thing like with social media. If you rewind to 2010, of course there's a few Arab countries that called it the Arab Spring, where social media was so-called wreaking havoc, or was at least that was sort of the local impression from abroad. People were saying this was fruitful ground for democracies. Finally, the people have a voice. But the assumption was always this is going to play out in the desolate deserts of some far off places. It could never affect the robust democracies of the West. And fast forward 10 years, and the biggest national issue was whether the U.S. president could use Twitter or not. So
Right.
I think we're seeing something similar. We're seeing something similar playing out with currencies, which is, in 2010, the whole debate was about the internet of information. And this is now, at least for Bitcoin, it's the internet of value, which has a lot of similarities with other commodities, hard commodities.
Right.
But yeah, I think it's finally sort of reached the mainstream, where you have a candidate for the US presidency. He said three things in the speech yesterday. He said, number one, get rid of cap gains tax for Bitcoin. Number two, back the dollar with Bitcoin, which again, he said he'd start off slow, like 1% reserve. And the third point was that fiat currency was designed to finance wars, which
Right.
maybe to the so-called, not insulting anybody, but to the normie audience that would usually consume this that kind of content on the mainstream, that sounds insane. And I've never actually heard a candidate talking about it, but it's actually 100% true. So yeah, this is a long answer, but to your point, yeah, I do think we're seeing the winds of change. There is a big move abroad and domestically to at least abroad they're already moving to a hard currency standard, hard money standard, but I think that conversation is just starting to blossom
Yeah, no,
domestically as well.
it's super interesting that RFK was talking about fiat dollar basically is used for wars, and that's basically what it's backed by. But you've seen with his with John F. Kennedy, he wasn't taking anything for military, and he stopped. He didn't want to do any military inventions, so obviously that affects the U.S. dollar too. So it's very interesting times. And in this fight against the West, Andrew, and a push towards de-dollarization, do you think the BRICS nations will actually be successful in ending or even trying to take down the US dollar, or is it just it's just far-fetched? What do you think?
Yeah, that's a great question. I think we're going to, so I don't have a crystal ball, and these are super, super complex systems. So I think anybody that with any degree of certainty says they know how this is going to play out, they're probably not being 100% honest, because again, there's first, second, third, fourth, fifth, 20th order effects that you can't really account for, because again, these are complex systems. So I think there's a few hurdles. If it was so easy to move away from the dollar standard, the BRICS countries would have done it a long time ago. They certainly have an incentive to do it, but they also have huge drawbacks to do it as well. We were talking earlier about India and Russia getting into these negotiations over what currency is acceptable, what isn't. The Russians want to use yuan, preferably. The Indians obviously want to use their own currency. They want to use rupees. But even if they agreed on, let's say, obviously, China's the 400-pound gorilla. If they did go with the RMB, with the Chinese yuan, history doesn't really show that might be preferable to a dollar standard. So
Right.
the U.S. gets a ton of flack for being profligate. I mean, rightfully so. I mean, within the last 4 weeks, the national debt got bumped up by 1.1 trillion or so. And I don't
just
know if you remember,
1.1 trillion, nothing crazy.
yeah, just a scooch. But if you think back to the 2007 Occupy Wall Street movement, that was over $700 billion, right? And this time around, there's just, I think people have accepted it. Money's going to get printed. You haven't heard a peep. So of course, yeah, there's a lot of money printing in the West for sure. But if you look at China, it's actually since the 90s they've printed at double the rate of the dollar. So
Right.
The other thing about this is, I don't want to go too far off topic, but again, coming back to the point of unintended consequences, or some people call it the Cobra effect. The backstory on that is in Australia, there was an outbreak of cobras. The government wanted to curtail that, so they started offering an incentive reward to start capturing these cobras. Of course, a few very forward-thinking people, let's say business-thinking people, they started these cobra farms where they were actually growing cobras, because now there's an incentive to turn in these snakes for money. So, and that's something super simple, right? That's basically like trying to get rid of vermin, or trying to get rid of an infestation.
Interesting.
So, and that's something super basic, and already there you have like second, third order effects that you can't really can't factor in, and
right.
let alone like an economy, right, or global trade, or so just one thought experiment is, or one thing to factor in is, you're having all of these deflationary effects, right, which China certainly isn't isolated from. So AI, we've seen, I think Goldman Sachs was estimating 300 million jobs are going to be on the chopping block. You have all these demographic problems. You certainly have them in the West. Probably in China, you have them even more. But the problem is, you have all these pressures that are putting all these market forces putting a downward pressure on prices. So again, if demographics are shrinking, there's less people to consume. That's going to push prices down. You have a house you want to sell, and now there's not a next generation to sell it to. By the same token, you have all these AIs doing basically office work, or that we were contending with. So that's going to be, I mean, you don't have to pay wages anymore. That's going to be way cheaper. So you have all of these deflationary forces. And what that means is you have less and less goods and services that can feed into this inflationary system, into this debt structure that needs to be maintained. It's basically the Jeff Booth school of thought. What does that mean? you gotta print even more to sort of compensate for all of these other goods and services that are on a race to zero. So what that looks like is it could look like a real estate bubble, which we're seeing in China, because there's like less and less assets, there's less and less goods and services that can sort of be inflated to keep the structure going. So is it gonna is the yuan a better alternative to the dollar? I'm not sure. Are they going to be able to pull it off?
Right.
I don't know how happy Brazil or India or even Russia in the final conclusion are going to be to sort of have their savings inflated away if that's their foreign exchange reserves are going to be RMB. So yeah, I'm a little dubious on it. I do think we are walking into a more fractured global global system where you're probably going to have a shrinking dollar, but
Absolutely.
that doesn't mean that the yuan is necessarily going to replace it or any other currency. I think we're probably going to see a big lift in commodities.
Absolutely, Andrew. And how important is it to return to a hard money standard with all this chaos in the market? And if it doesn't happen, and you look at Fort Knox, and what if they don't have any gold? Would that make the U.S. dollar worthless because it's backed by nothing but interest? Like, so how important is it to go back to return to a hard money standard?
Yeah, I think it's essential for a lot of reasons, but if I could condense it down to sort of one point, is that we touched on it before. So currently we're in a fiat system. It's an inflationary system. There's $400 trillion of debt out there globally. The average country is 360% debt to GDP ratio. So you can imagine there's this looming debt structure out there that needs to be maintained. Yeah, come hell or high water. You need to keep it going, and the way you keep it going is by paying interest on the debt, by feeding it. And so the only way you can really keep that going is if you inflate prices, like within the economy of goods, services, commodities. And as we were saying, as we're getting more and more efficient, if we have a good money, those efficiency gains, as we're getting more technologically sophisticated, those would be reflected in the money, except they're not, because those efficiency gains can't be allowed to be reflected in the money. So they need to be offset through printing, and that's only going to accelerate. So the way it works is because they're not. I mean, we've seen some helicopter money where they're basically just handing out cash, or they're talking about doing UBI, and that's probably gonna come at some point. But another way, and this is what we've been seeing the last 30 years, is sort of this busy work that money printing really. It's this. I think 20% of the U.S. market is financialized, which is essentially, it's up from 10% in the 1970s. So it's doubled, which is all of these, office jobs essentially that are being produced. That is pushing papers, pushing pencils. So that's another way of saying that money printing encourages busy work and unproductive work, and the most unproductive work is war. So it's the most unproductive because not only are you sitting around wasting time, you're actually destroying assets, whether that be humans, if you want to call those assets, or you're destroying buildings, or you're destroying supply chains. So ultimately, the longer this goes on, the more unsolvable the debt structure becomes. Ironically, the more efficient we get, and the more ill-suited the system is to sort of to deal with these technological gains, the more there's this magnetic pull to war. And I think we've seen that. And it gets especially dangerous when you have these two powers that are clashing, of China or the BRICS, which is this emerging power, and you have the existing Western alliance, and it's called the Thucydides trap. But I think even Elon Musk was mentioning in the book. It's kind of interesting because you have all these very these very academic sort of sidelined concepts that are coming to the fore, except they're not that academic, and they're not that trivial, because we're headed in that direction. We're gonna live through it. So I think it's essential to get to a hard money system, because the alternative probably not that rosy. Yeah.
You absolutely nailed it. And I just wanted to move to a topic of financial censorship. I know a lot of stuff has been happening in the past, like the past 3-4 months with Nigel Farage. He's a politician that has his bank accounts. They were either closed or he wasn't allowed to open up new ones, which is ultimate financial censorship. So are we heading for that financial tyranny if a CBDC gets rolled out, or what do you think what's your take there?
Yeah, I'm really glad you mentioned that. That's been a really interesting story. I've been following it too. So I don't have the details here. I'm kind of going off because I don't think anybody has them. I'm going off of what Nigel Farage was saying publicly, which is that I think he was banking with Bancoos for decades. They shut down his bank account. He thinks he thinks it's because he was designated a politically exposed person, a PEP. Says his family got the same treatment. They got their bank accounts shut down too.
Wow.
And for anyone that's worked at, I'm hesitant to say, but I did work at banks for a long time, and what he says rings true, because I remember whenever you onboard a client or you have these KYC reviews, that's what they literally do. This I remember they print out people's social media, they run these background checks, and you go through it, and most of the time it's fine, but you could easily see how that could drift into a situation where something is, politically unfashionable. Maybe there's something, quote unquote, problematic that they said on their social media. And you could easily see how this could, come to a risk committee, and they make, a decision about, which is a problem because in the current system, banks are they're like close to, I know that there's these weird public-private hybrids, but they're pretty close to public utility because, let's face it, like, how are you going to pay your bills? How are you going to pay your rent?
Right.
If you can't use your credit cards, you can't use your bank account. So yeah, I'm sympathetic to his point of view, and to your point, like, absolutely, like if we're headed towards a CBDC world where you're essentially collapsing the entire stack of financial service providers, and now everything's trading on one ledger, which the government controls. Of course, the government is by nature political, so there are going to be political considerations that are going to come into play. And I mean, personally, I wouldn't want to live in a world where I have to worry about a name that was set 10 years ago that all of a sudden becomes politically unfashionable, and now you can't pay for groceries. So yes, again, hard money standards, that's apolitical money, super important.
Yeah. Well, Andrew, it's been such a huge pleasure coming down to Wall Street Silver and speaking with us. It's always great having you on, especially covering all these topics. And hopefully in the future, as the market develops, we can have you back down and then you can talk to the whole community, because that was great.
I'd love to. Can I just let people know where to find me real quick?
Yeah, of course. But I'm going to put it in the description as well. So
awesome.
You let them know, and then they can click it in the description too.
Love it. Thank you. So if you enjoyed this, the best place to reach me is on LinkedIn. Just look me up, Andrew Axelrod. I post daily for the most part. Click the notification bell and you'll get pinged whenever I post. But thanks for having me. This was great.
Yeah. It's been a huge pleasure, and then hopefully have you back soon.
Awesome. Thank you, Ivan.